Ramdev Agarwal says markets are betting on 310 seats for the BJP and this will ensure political continuity. He weighs in on the government's fiscal space going forward. He says revenues from taxes for the government should balloon to $1 trillion by 2029. Hello and welcome to a fresh new edition of Markets Forward. It's a new week and the market got to a roaring kind of a start, but then it would basically fizzle out. This is, of course, Markets Forward, where we will tell you everything you need to know as we prepare for the next trading session. I'm Prashant. With me, my colleague Reema Tendulkar. Reema, hi.
Hi, Prashant, and we're going to be with you for the next 20 minutes as we take you through all the big stories, the big news of the days, the key developments, top corporate voices, and the events to track ahead. But first, the day's market action. In the morning, it was new highs, but then just profit-taking took charge in the last 1 hour.
Looks like it, Reema. I think we can just blame it on nerves, election nerves, right? And not more than that, because it's not as if there's anything happening globally. It's all been very much local. The market basically, if you just think about it over the last 1.5 months, earlier, initially after the first two phases, the market got very sort of nervous, right? There was that conversation about turnout, etc. The market sold off a little bit. Then after a few phases, it came back very strongly and swung to the other side, made new highs. And the chatter was that, well, it's of course full majority and whatnot. And I think, as we really now head into the end of this particular long election season and sort of wait for exit poll results on Saturday, I think, it's natural ahead of a big event and the outcome, which of course is only next Tuesday. There will be some nerves. So essentially, I think that's what we saw. The high was made right before 12 noon. That was, of course, and then the market continued to slip, picking up pace at about, 245 or so, 240 or so. Now, banks outperformed, and we basically have been seeing the underperformance. The index has been lagging, but today and over the last couple of days, it's been bridging the gap. On the Nifty, just one point, though, we've been highlighting a resistance on the Nifty. After the new high, people have been asking what next. There is a sort of there's a Nifty trendline resistance, which is 23,125, which we've highlighted for the last 2 or 3 days now. The high today was 23,110, so almost fell short by about 5 points, got to that trend line, and then, of course, there was a bit of a sell-off. On the downside, kind of a trailing reversal could be kept at the 20-hourly, which is at about 22,915. Of course, the low today was below that, but then the market quickly jumped and ended above that particular level. Declines outnumbered advances, not by much, but that's what essentially the day was. Not very much ready to take away, but the fact is that from the day's high, there was a fair bit of a sell-off. Reema.
And that banks continue to, show some strength, though there was profit booking, but the PSU banking index was up 1.3%. The Nifty banks were up close to about 300 points, and IT too provided that leg of support for the markets. The Nifty IT index up 0.5%. But on the way down, PSUs came in for a sharp amount of profit booking, and the PSU index was down nearly 1%. In the banking pack, you had IndusInd Bank, Axis Bank, HDFC Bank. HDFC Bank running higher for the third consecutive day, but the action was in the broader markets in individual stocks. So look at an Ashok Leyland or an Exide or a Glenmark Pharma and Divi's Laboratory in the pharmaceutical pack, even something like an Affle, Nazara Tech. All these stocks, we'll talk in greater details, but some big moves visible in mid-caps. But let's tell you first what we have lined up for you on our show. We start with the top movers and shakers of the day. Hormus joins in. Pharma stocks were on fire. Divi's Lab, Glenmark Pharma and Torrent Pharma all soared on their Q4 numbers, brokerage management commentary and brokerage verdicts. And CNBC TV18's popular segment, D-Street Chatter, on the show. Nimesh will tell us why JB Auto was buzzing in trade. And lastly, the key market events to watch out for tomorrow. But first, let's get to today's action. Hormus joins in with all the top stock movers of the day. Hormus.
Slight bit of jitters towards the close of the session, and that reflected on the performance on the benchmark indices as well and the broader markets too. But we'll start off with some of the earnings reactions that came in from Friday and over the weekend. And Ashok Leyland, possibly one of the stocks of the day, along with Glenmark, both of them 7.5% and 8.5% higher post their earnings. Some very strong management commentary coming in there as well. Exide, after some brokerages raised their targets on the stock post the earnings, another 4% there. India Indiabulls Housing, there's a bit of an AUM decline there towards the results, but the stock ending 2% higher, slightly off the lows of the day. But Manappuram had a negative reaction to its earnings. PSU banks, there's a bit of a profit booking towards the end of the day, but the sector as a whole, the index stood tall. The Indian Overseas Bank, UCO Bank, most of these constituents having very little float in the market, but those stocks ending with gains of anywhere between 3 to 10%. The PSUs in general, the non-banking PSUs saw a bit of profit booking towards the close of the session, but REC and PFC stood tall even in that, both of them ending with gains of 4.5% off the highs of the day, but with gains nonetheless. HPCL was another outperformer in today's session, and BHEL as well having a bit of a negative day in today's session, 2.5% lower. Fertilizer stocks among the other sectors that did well in today's session amidst the broader market sell-off. RCF continues to do well. It was up on Friday as well. Another session of gains today, 164 now on the stock. NFL, Zuari, GNFC, all of them having a good day. And lastly, I wanted to highlight Coforge within the mid-cap IT space. It is up for the 12th day in a row today, and that is the longest winning streak on record that the stock has seen, and is up 23% in 2 sessions, still in 12 sessions, beg your pardon. So still significantly away from the record high, but still 12th day of gains for Coforge. Back to you.
All right, Harmus, thanks very much for that. So lots happening as far as single stocks are concerned. But let's get you some sort of views now, and we are now joined by Ruchit Jain, who's with us. Look at technicals. Anand Tandon is with us on the fundamentals as well. Gentlemen, good afternoon. Good to have both of you here. Ruchit, just price action first. A quick word on the Nifty, Bank Nifty, and how is risk reward looking near term?
Yeah, hi. Very good afternoon, Prashant. Very good afternoon, Rima. Well, there are two things. One is trend and second is momentum. If you talk about the trend, then there is no doubt that the trend for the market remains positive. But from a momentum perspective, I think the markets have seen a decent run up in last 10-12 days. It is around the higher end of a channel of 23,100, which is the resistance, and hence we would witness some higher volatility, which clearly can be seen by rising VIX as well. But it's better to trade in the direction of the trend. Levels wise on the Nifty, 23,000 call and put in derivative segment have decent open interest, both of them, which indicates that straddle has been written over there. And if you take combined premium of those, then that comes around 250 to 60 rupees, which means that 22,750 would be a support. And 40-hour exponential moving average is also around 22,770. So around 22,750 to 800, one can expect a decent support base getting formed. So in case in tomorrow's trading session, if we get any dip towards that 22,750, 22,850, I think that would be a good opportunity to take fresh longs. So better to trade in the direction of the trend. Bank Nifty looks quite solid because a catch-up move has been seen over there in last 2-3 trading sessions, still away from its previous all-time high, and we think that before the elections outcome itself, we could see a new high getting formed in the Bank Nifty as well.
Okay, fair enough. Ruchit, thanks for that. That's the first view. We'll come to stocks. Anand, coming to you as well. But let's just sort of get this ball rolling with. With an eye on some individual sectors and stocks. So pharma is top of the list. Divi's Laboratories was up. They reported a beat on numbers. Glenmark stock surged 7%. There's positive commentary from the management. And there was Torrent Pharma as well, which was up after a solid showing. Aurobindo, though, was down and out. It had run up a little bit, 5% or so, the last 1 week into the numbers. Ekta is here with a quick roundup. Ekta.
Thanks for that. Well, I'll start with Divi's Labs, which was in focus in today's trading session. The commentary included that they estimate long-term double-digit growth. The growth will be aided by long-term supply agreement with one of the innovator companies. They are mulling entering the market for basic amino acids for GLP-1 as well. 2 molecules are going off patent, which would provide a business opportunity in FY25, 7 molecules over the next 5 years. Capex 1,500 crores, cash 3,200 crores on books. Kotak retained its sell call, Goldman neutral, Jefferies hold, but they raised their target price. Elara has a sell. Valuations continue to look punchy for Divi's Labs. Torrent, they estimate growth to be around 200 to 300 basis points higher than the Indian pharma market. US should contribute positively. They are estimating 15% growth in Brazil, high single-digit growth in Germany, potential to improve margins by 50 to 100 basis points every year. Brokerages such as Kotak have maintained a reduce, Antique maintained its buy, Jefferies buy, and Nomura is also bullish on Torrent. Glenmark, revenue growth of 10 to 11% on a consolidated basis for FY25, EBITDA margins 19%. targeting double-digit growth. They're requesting the US FDA for a meeting with at the earliest when it comes to their Monroe plant. Ryaltris, their inhaler drug, is doing well in Europe. FY26 is expected to be a good year for the company. Aurobindo, they expect a muted FY25. FY25 should grow in double digits, but not as much as earlier years, estimating 21 to 22% in terms of margins. Expect the growth to pick up in FY26. UGR Unit 3, 20 ANDAs are likely to be impacted, and the impact should probably be visible for the next 1 year. Remember, they've received an OAI on this unit.
Okay, thank you very much for that. Anand, you want to come in on the pharma numbers that Ekta was alluding to?
Well, the numbers are, more or less in line with what most people were expecting. There are, marginal surprises here and there, but not anything great. I think, you are still looking at a growth which is somewhat muted. Most of the companies are likely to report single-digit kind of profit growth going into the next year, or at best mild double-digit. Of course, the outlook for the business has definitely improved, and given the fact that this has been a sector that has not been a roaring outperformer, unlike many of the others, it perhaps gives you some space on the upside. But overall, if you were to look at individual stock valuations, you'll still be finding it challenging to buy most of them.
Ruchit, any thoughts on either a Glenmark or a Divi's laboratory where there was some momentum in today's trading session?
The price volume action seems quite positive in Glenmark Pharma, although even Divi's has seen a good up move, but the follow-up move was quite strong if you do comparative analysis in both the names. Previous highs of 1100 has been surpassed, so there's a potential of further up move in Glenmark from current levels, and over short to medium term, the all-time highs, previous all-time highs were around 1240. So there is a potential for the stock to test that 1200, 1240 kind of levels in the near term.
Let's talk about the auto space, right? Two names really stood out. One is, of course, battery maker Exide. It's done phenomenally well this year, some 50% up. But Ashok Leyland was the other one, 7%. And we had the management with us earlier today. Sonia is here with a roundup of both these numbers and what the commentary looked like. Sonia.
Well, thanks a lot for that. As you rightly pointed out, both stocks did really well today. Exide has had a dream run this year. It's hit a 52-week high. The stock is up 55% in 2024, and there are multiple brokerage upgrades that have come through. Nomura has a buy, raised the target price. Morgan Stanley has raised their target price. JP Morgan raised it as well, and so did Investec. Now, why are brokerages so bullish on Exide? Because of multiple reasons. One is the core lead acid business is doing very well because of a pickup in the auto replacement cycle and an improving industrial demand. The EV scale-up is also on track. The auto recovery and an infra push is something that will drive growth going forward, while the lithium-ion investments are also on track. The valuations of the company remain quite attractive as far as the stock is concerned, and margin improvement and scale-up of new energy business remains on track. The other big positive is that EBITDA margins have come in at 13%, driven by a supportive raw material, improved mix and cost optimization as well. Now, Ashok Leyland has also hit a fresh 52-week high. It was up 7% today. The stock is up 20% in 2024. A lot of brokerages are positive. Citi has raised their target price. Jefferies has raised their target price to 205 as well. The reason for bullish views is a sharp gross margin expansion in Q4. And the management commentary was very confident. They spoke about how demand is improving, how the bus market is seeing very good demand and their market share has gone up over there, and how the momentum in the commercial vehicle sector will improve going forward. Back to you.
Thank you very much for that, Anand. Ashok Leyland sounded a lot more bullish on the CV cycle on demand compared to what Tata Motors had to say. And plus, as Sonia was pointing out, valuations are pretty okay, and there is scope for margin improvement. Even the management is guiding for an improvement in margins going ahead. Do you like Ashok Leyland or not quite?
Well, I mean, there is a story there, at least, as you mentioned, as Sonia was mentioning, there is also the bus angle in Ashok Leyland, which is doing quite well. And more importantly, they seem to be the only game in town. Most of the others are not able to deliver or haven't got the technology right. So that remains one of the key areas. And given the fact that, you are looking at replacement from government, especially for state road transports and so on, because of the central government initiatives, that will certainly help to boost demand. The CV side, to me, looks a little less exciting. It is somewhat muted, I think, in terms of volume. We are still looking at very low single-digit kind of growth. But I think Ashok Leyland will continue to gain market share compared to the competition. So from both perspectives, the new areas as well as the traditional ones, among the bus manufacturers and the heavy vehicle manufacturers, I think Ashok Leyland is well positioned.
Got it. Ruchit, exide specifically, any thoughts?
Well, the stock has seen price up move supported by very good volumes in the month of April. Then a bit of consolidation of couple of weeks where the momentum readings got cooler from the overbought zone. Now, since it is trading at all-time high, previous corrections, retracements generally gives us target projections and which are coming around 590, quite higher from current levels also. So I think the stock has still good potential around, if one is looking from a bit mid-term perspective, then one can expect levels around 590 to 600.
And Ashok Leyland, Ruchit? Ashok Leyland, Ruchit?
Yeah, Ashok Leyland also has given a breakout from a consolidation phase. In fact, we have seen that when the entire auto space was doing well, Ashok Leyland was broadly into a consolidation phase till the month of April. Post-April, we witnessed that breakout supported by very high volumes. And I think the retracements give us a potential targets around 245 in the short term. So if one is holding any long positions in the stock and from a near-term trading perspective also, then one should continue to ride this trend for potential targets around 245.
Anand, we've spoken about these defense, shipbuilding stocks, in the past as well. But look at the way the market is reacting to Cochin Shipyard. Yes, the numbers are strong. The company's reported margins of 22% versus a loss in the comparable quarter of last year. But even after a 700% return in 1 year, the stock continues to gain ground. So do you think as long as the numbers look good, the stock can keep riding higher?
Well, I mean, there is nothing to prevent it from going up. But the fact of the matter is that, are you going to be able to make a projection which justifies the kind of valuation that some of these companies have made, and the assumptions you have to make for the buyer and the kind of market that presents. So there is no doubt that for the near term, government has given out enough orders and more for many of these companies to do very well. But the question is that there is a limit to how much India can invest in defense given the other demands that are there. And oftentimes what you find is that these demand parameters get shifted in terms of when the government is able to pay. For now, I think defense is on a solid footing. There is no question. The government, and given the geopolitics that we have around the world at this stage, all governments are looking to increase their spend on defense. And India has also followed suit and has done quite well, actually, especially for the naval resources, which is where the shipyards, etc., come in. There is already a high level of indigenization, and we will need to increase our fleet given the threats we have from the neighbors. So yes, you will look at a consistent increase in the sales, but there is a capacity constraint that is there as well. So beyond a point, valuations just don't justify even when you have a very high order book. It's not like you can suddenly double your output, and the output will remain a constraint. So I think at some stage you'll have to take a call. I think the valuations are already looking stretched for most of these players, but given the kind of retail interest that is there in the stock market at this point, it's difficult to put a cap and say that, it won't go beyond this. Prudent money would start to take money off the table.
The orders have come in. It's now about execution, as you said, over the next couple of years. Actually, for most defense companies. Gentlemen, good to speak with both of you. Anand and Ruchit, thank you for joining us here on Markets Forward. Thanks for your time. We'll, just tell you what we heard from corporates that joined us through the course of the day on the program today. So I'll start with Ashok Leyland, which of course reported a strong quarterly earnings set. Management told us that FY24 was of course excellent for the CV sector, but they don't see a drop in volumes in FY25. They actually said that, April has begun on a pretty good note. In April, they saw, a 10% growth. May is also looking pretty decent. That's the reason why, as against expectations of a bit of a slowdown, it could be a decent year. They're also, of course, targeting mid-teen EBITDA margins over the medium term. The focus also is now going to be on strategic financing and potential M&A going into the future.
We also chatted with the management of DLF. The real estate player has major plans to launch another super luxury project, or Lux 5 as they call it, at the Golf Course Road in Gurugram with a sales potential of 20,000 crore rupees. They've given a pre-sales guidance of 17,000 crore for FY25, of which Lux 5 accounts for only 3,000 crore. The management added that the Mumbai project in Andheri can have a total saleable area of 5 million square feet.
Okay, there's DLF. Suzlon was the other company that we had on the program. The company expects the total installation, wind power installation in the country to be to the tune of between 4.5 to 5 gigawatts in FY25. This is against a total all India installation of 3.5 gigawatts in FY24. The management told us that the company's market share in all of this remains around the 30% level. They said that the order pipeline provides strong revenue visibility for the foreseeable future.
And Nazara Tech Management is guiding for a double-digit revenue growth and 100 basis points margin expansion next year. They're also eyeing acquisitions. They told us they have a robust M&A pipeline. Today, there was also a large block deal where the promoters sold 6.3% stake to Plutus Wealth Management. The management said with this, the promoter's stake falls to a little more than 10%, and they also clarified that they have no further plans to sell stake.
Okay, well, with that, it's time for a quick commercial break. We come back with a popular segment, D Street Chatter, some of the stocks that you need to watch out for, and we'll tell you the events to watch out for as we come back tomorrow. Stay with us.
You're with us on Markets Forward, and it's time now to get you D Street Chatter. Nimesh will get us an insight into all that happened in the dealing rooms today. Nimesh.
I remind today was a day of two halves. The first half was quite strong. The Nifty was up over 100 points. But we saw a very sharp sell-off in the last 30 minutes of trade, because of which the Nifty ended in the red. But the momentum in the broader market seems to continue. In terms of individual names, the first stock on my list is JBM Auto. Big move in that stock and large volumes as well. In fact, Y2D the stock is up 48%, and now the street is anticipating a large corporate development in JBM Auto very soon. So that's the first name. The second stock is Inox Swing. Well, the stock has been consolidating of late, but I understand there's going to be a large block deal in Inox Swing very soon. Most likely, the promoter entity is going to be a likely seller there. So that's the second name. The third name is Finelix Cables. For the second, they're running big move in that stock and in large volumes as well. I understand that a leading AIF and family office are active buyers in Finelix Cable of late. And the last name is Zomato. Well, that stock recovered sharply from the day's low. I understand the selling pressure from a leading long-only fund is largely over, and hence a big of up move in that stock in today's market.
Okay, all right, Nimesh. Some of these are interesting names, Finelix especially. We'll talk more about that over the next couple of days. Thanks for that for now. But what are the key events to watch out for as we come back tomorrow? Ekta has got that list. Ekta.
Well, I'll start with the US Fed Mester's speech, Fed member Bowman's speech, and another Fed member speech, Mr. Kashakari's speech. We do have some speeches from the ECB as well. We have a Eurogroup meeting which is going to take place tomorrow. In terms of data coming in from the US, the Red Book Index, the S&P Case-Shiller Home Price Index, the Housing Price Index, and Consumer Confidence. Earnings on Tuesday include Amara Raja back home, 3M India, Aster DM, Shalby Brigade, IRCTC, ITD Cementation, MedPlus, Supriya Life Sciences, Wockhardt. And a couple of stocks going ex-dividend include Thyrocare, ITC, Power Grid, Trident. Eicher Motors will be presenting at the UBS Asian Investment Conference, and Ashok Buildcon and Rizari Biotech at the Nirmal Bang Investor Conference.
Okay, thank you very much for that list. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates.